When someone asks how to form an LLC, a limited liability company, the conversation rarely starts where it should. Most people come in focused on the paperwork, the filing fees, and the turnaround time. Those things matter, but they are downstream of a more important question. What are you trying to accomplish, and is LLC formation the right structure to get you there? LLC formation is not a transaction, it is a structural decision, and understanding what it really entails will save you from having to revisit it at a much higher cost later. At its core, forming an LLC creates a legal boundary between you as an individual and the business you operate. That boundary is the source of what people commonly call liability protection. When an LLC is properly formed and maintained, debts and legal claims against the business generally cannot reach your personal assets and personal liabilities. Generally cannot reach the business. I say generally because that protection is not automatic or permanent. Courts have a doctrine called piercing the corporate veil, and it applies to LLCs just as it does to corporations. Commingling funds, failing to follow operating procedures, or treating the LLC as a personal account. All of these can strip that protection away. Proper setup is a starting point, not a finish line. The entity exists on paper when you file the articles of organization with your state. It exists in practice when you operate it correctly. There is real value in using professional formation services to establish your LLC. The filing process involves selecting a registered agent, choosing the correct state, naming the entity in compliance with state requirements, and in some cases, navigating publication requirements. These steps are not difficult, but errors here create problems that compound over time. A thorough formation process accounts for the downstream decisions, not just the immediate filing. That includes the registered agent service needed to receive legal correspondence, the operating agreement that defines how the business functions, and applying for an employer identification number, or EIN, to establish the entity's federal tax identity. Each of these connects to the others. An LLC without an operating agreement runs on whatever default rules your state applies, which may not reflect your intentions at all. And an LLC without an EIN cannot open a business bank account, which puts you right back into the commingling problem that undermines the liability protection you formed the LLC to get. A lot of attention goes to state selection when people think about forming an LLC. Delaware and Wyoming come up frequently, and there are legitimate reasons for that. Delaware has one of the most developed bodies of case law around business entities. Wyoming offers strong charging order protections and relatively low fees. But state selection decisions should be based on your actual situation. If you operate in California, forming in Wyoming still means registering as a foreign entity in California and paying California fees. The advantage is often smaller than it appears. For many small and mid-sized operations, forming in the state where you actually do business is the most efficient approach. Any good formation consultation should address this question directly, rather than defaulting to a generic recommendation. One thing that surprises people is that an LLC is not a tax classification. For federal income tax purposes, a single-member LLC is disregarded by default, meaning its income flows through to your individual return. A multi-member LLC is treated as a partnership by default. Either structure may elect to be taxed as an S corporation or a C corporation, if that designation offers a better outcome. This distinction matters for how you pay yourself, how you handle self-employment taxes, and how the business is eventually sold or transferred. Getting this right at formation is considerably easier than correcting it after the fact. The clients who get the most out of LLC formation are those who treat it as the beginning of a business structuring process, not a filing they need to complete. That means an operating agreement that reflects the actual ownership and management structure, a separate business account from day one, and understanding what your registered agent is doing on your behalf, and keeping that relationship up to date. The goal is not to file the paperwork. The goal is to establish a structure that does what you need it to do, for as long as you need it to. If you found this useful, subscribe for more on business structure, asset protection, and entity formation. And if you have questions about your specific situation, The link to Acacia Business Solutions is in the description below. For educational purposes only. Not individualized, legal, or tax advice.